This is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, August 20th, 2024. It is 10:24 a.m. Eastern Time, so we're almost an hour into the trading day, and here's what we're going to do in this one. A very brief update, relatively brief update on the equity markets. I want to talk about that, including my personal trading plan. Somebody asked me, they said it would help to kind of know my head, my thoughts. And I'll get to that. I answered that in the reply was from yesterday's last post. That's in the comment section there. And I also added a comment here on the, I got that breakout to you today, PayPal, talking about, how, a solid daily close would solidify it. But I wanted to just add to this or show you this comment I added down here. So, and this was, I haven't refreshed the page. This was about 30 minutes ago. So far, volume confirming on the breakout is ideally you want to see a stock breakout 1.5 times or better average volume. A breakout on 1.5 times or better average volume. What does that mean? Any broker will give you average volume on their platforms, usually 90-day, 100-day, sometimes 60-day, and then you can calculate it. There's a formula you use. It's the volume at that point, round it off to the nearest half hour, and then divide that by 6.5, or multiply that out because there's 6.5 hours in a trading day. Anyway, volume was good there, but I went on to say that the S&P 500 and NASDAQ 100 also remain above their respective near-term uptrend lines for now, although I'd give it north of a 90% chance they break down today. That's high. That's a pretty high odds. And if so, depending on how impulsive and deep and prolonged that pullback is, that could provide a headwind for the PayPal long trade. And so far, so looking good. Now, you can even eyeball volume. You just go to a PYPL. PYPL. Yes, I did that correct. I just need to key it in there. You can see the big volume surge on the breakout, but so far, because they're coming in and selling the indexes, I don't know if this still is. I believe it always was a component of the NASDAQ 100 and or also the S&P 500. And so the fate of this trade, not guaranteed, but to a large extent will jive with the broad market. Now, what I did is I added a level here. So I threw out that trade. If you want to take it, again, my job is to throw out long trade ideas, short trade ideas, the best looking setups. I mentioned, two strategies. If you wait for a solid daily close to either take a position or bring it to a full position. So, you can take an initial breakout, then see where if it looks like we're heading into the day and it's solidly going to close, there's a much better chance it's going to have go on to hit those targets I gave you right there. I labeled them since the video yesterday, and might have tweaked one of them here. I'm not sure. The initial targets are the same. That was the breakout point, 70.69. I added this level here because if you see there's if you want to keep stops tight. In other words, if a breakout fails, that's no bueno. You go back into this basing pattern, this multi-month range, and there were a lot of reactions there. In fact, that was a failed breakout right there above the previous two reactions. So, but it set up this nice level there. So I think that's an ideal stop. You have an uptrend line, a near-term uptrend line, and then really nice, pretty decent price support there. Again, with these three reaction highs there. So that would keep, if the breakout fails, then we could come all the way back down towards the bottom of the range, and that won't want to ride that out. Other than that, like with any trade, usually use an attractive risk reward ratio, 2 to 1 or better. 3 to 1 is a pretty sweet spot for most folks, meaning you calculate if I'm targeting T3 and you go like this, you say, well, if I hit that, that's going to be a 40% gain. So I give myself a 12%, 13% stop loss, but I wouldn't give a 13% stop loss to this one because if it goes down that far, that's just clearly a failed breakout. So now, again, the success or fate of this trade doesn't exclusively hinge on its own merits as a breakout. And as long as it holds above that 70.69, great. You can keep a tighter stop if you want, and that's it. I don't want to speak much more on that, but I do want to talk about the markets. And like I said, very high chance we break down. These trend line breaks look imminent. So this is QQQ. This is a uptrend line right here. The wedge. Traders are going to be eyeing it when we get a breakdown, whether it comes today, tomorrow, Thursday. They're going to be eyeing these gaps, and the way this this game we call technical analysis works is they should, quote unquote, should be buying the top of the gap. Gaps are natural support and resistance levels. Traders love them. They trade off them. And if they don't, then we go down. If we just go right on through there without anything more than just a little hiccup, then that shows you there's a shift in the supply-demand dynamics, and then they should buy the bottom of the gap. And, whether we have a reaction or not, if they take that out. In other words, these are support levels. So I'm waiting to gauge the nature of the next pullback. How impulsive is it? How fast do we drop? Or do they just gobble it up at the first support levels and go onto new highs? If they do, I think an ideal trading plan is wait for the breakdown, wait for the correction, whether it's shallow or deep, and then that establishes this high. And at that point, we really should have no business if we're going down to my deeper target. If the markets, let's say, hold on, I still maintain those deeper targets based on the long term, the weekly charts, whether we punch up into a marginal new high or not. I don't want to ride up to a new high, whether it's just marginal, incremental or not. We're too far from it. And I'm talking about, on the indexes, particularly QQQ right there, the bearish engulfing candles, a lot of, solid bearish technical evidence, sell signals will have been negated if we do that. And here's my thoughts. If we go up much more, remember, we're still well comfortably off the highs right now, 5% or so. If we go up much more than pretty much where we're at right now, we hit what rocket scientists call escape velocity. If you're launching a rocket, escape velocity, when it reaches a certain speed, that's enough that it should carry it up through and out, on Earth's gravity. And it's kind of the same thing here. If we go up much more, we're kind of pushing the upper limits of what would be a typical, but strong bounce. So that's that. Anywho, this is it. So most likely these things will crack today. Why? It's all about statistics, probabilities, history. You don't have that many green candles. I was fully expecting, as I clearly said, in what I called an explosive rally. Well, could easily be in the double digits. And that's exactly what we got off the 200s I'm talking about. I'm reversing here. So yeah, it was, I would call that explosive. I would say, well, we know it's the double digits. So check, check, check. And now the $1 million question is that it? Is that what? Well, you can't argue the logic. Oh, it's good. I did buy the heck out of the 200s. My narrative played through that. Once that happened, you saw the stocks hold the 200. You'd hear all the hype about, well, yeah, well, now we're going to get a rate cut, so that's super bullish. Dip buyers step in, blah blah blah. All that's played out. Now the big question is, what happens from here? That's the important thing. So I'm still maintaining that outlook. Again, I'm going to watch these breakdowns here. We don't have it yet on QQQ. There's SPY testing the line right now. And so you can see these are just some near-term levels. Same thing on SPY. You've got the gaps right here. So, that would be an ideal and a minimum target. That would be about almost a 2% pullback on SPY. And I think it's better than a 2% if we get there from the highs. It's going to be 3% on QQQ. Okay, so there's your targets, active trader targets, swing traders. If you're playing the long game like I am, that's why I'm talking about my trading plan on those positions. The long game says that we had a lot of technical evidence. It's been building for a long time, but then the sell signals came. Forget about divergences, overbought conditions. Those play into it. We went down. We hit my first target here. We hit my second target here. We covered reverse because we hit the 200 dates for the first time in a long time. They bought the 200s. And now the $1 million question becomes, do we do this? Oops, I'm trying to draw an arrow. And if we're going to do this, and it's going to happen in this fashion, T3, which I already shared, I think there's a decent chance. If we come back down, we undercut those 200s and we go on through them again, and we take out the recent lows. That's what I was saying recently. We could just blow right on through T3 with very little, if any, reaction. I'd kind of lean that way. Why? Because we came in such close proximity already, and this was just a it'll be a psychological knife through the heart of the bulls if this rally. This to me was, like I said, it was expected. There's a combination of short covering and massive dip buying. All those that wanted in on Nvidia and the Nasdaq 100 and Microsoft and Alphabet, all that for a long time that weren't being let in, they got a chance. And but the thing is, they a lot of them, they've been buying it lately, and it's no longer buying the dip. The dip's over. So I say that, I laugh because I look at some of the headlines that come out in the media, and it's like people are those market watch and all that, and buy the dip on X, or buy the dip on the market, buy the dip on the dip's over. You missed. This was buying the dip here. And so anyways, that's that. Let's move on. Let me get to the semis. So we'll watch those trend lines. I'll loop back towards the end of the video. But I really want to cover the semiconductors for you. That's a very important sector, as I like to say. Tech is the stock market. There's no arguing that. It's not debatable. It's half of the Nasdaq 100, and it's over 0.25%. Makes up a quarter of the S&P 500. By far the largest sector in the S&P 500 of all 11 sectors. So it's all about where those big tech stocks go. And as I like to say, the semis are pretty much the canary in the coal mine for the tech sector. So let me just start out here. This is something I've shared many times in the past to just kind of put in perspective, because I think one of the things I try to do is, a lot of times both my upside targets on, depending on what we're trading, but explosive things that have a lot of upside potential that run, like natural gas or crypto, Bitcoin, both in this case the semis, both my bearish targets when I'm looking for a major turn, and my bullish targets when I'm looking for a major turn, to the upside, can seem excessive. Let's just say that word to most. But what I try to do, and I do all the time, from time to time, I go back and I show you the history of this. So the semis, you don't have to understand all the inner workings, but it's pretty simple. It is a sector of boom and bust. There are periods of consolidation where they go sideways, but for the most part, when things are good, they're great. And the rallies are very strong. They're measured, typically the primary trends are triple-digit rallies, 100% or more. But the corrections, because of that cyclical nature of this sector, when it's booming, orders are coming in. A lot of times they can't even meet the demand, but then all of a sudden, and when things turn, it develops pretty quickly. And by the time the gig is up and they realize it, you have a glut of semiconductors floating around on the market. Orders start to get pulled and canceled. And I spoke to that recently, with like Nvidia, for example. They're coming reporting soon. They're coming up on a week from now, I think August 28th. And so, by the way, I just got an alert on QQQ that we broke down that trend line. Here, I'll just kick some giggles. I like to do this. This is the nature of technical analysis. So, we're on it. It hit it. So I got that alert, or maybe I had it on a different time frame, different board. So as soon as we take that out, you see it should be pretty quick. Rush for the exits. Let's see, it's SPY. Yeah, SPY took it out. Look, and now QQQ just needs to. All right, I'll get back to those guys. I'm pushing the shorts hard right now. All right, SOX. Nope, we had the index itself. I had to replicate this because the dang ETF SOXX, which tracks that index, had a split, and this makes all my annotations quirky because they don't adjust for that on this charting platform. All right, guys, this is it. Look, it's 55% back then. That was in the late 90s off that divergent high. There was a dot-com bubble, 85% drop in the semis. Divergent high here, I didn't even measure that one out, but it's well into the double digits. And then divergent high 2, 70% drop. Divergent high 28%. So all this is in the strongest bull trend the semis have ever had, but these corrections, if you want to call them, by old school metrics of 20% or more drop, which I don't subscribe to, that theory that 20% drop in the semis is a bear market. It's a correction, but 50% right there off that divergent high. So here's the takeaway. Here's what I see real quickly in this chart. You get these divergences, you get those double digit drops. Again, I didn't measure that one. It's got to be 30-40% or more. But it's when you get those consecutive, the divergence gets even bigger. That's the difference of DH1, DH2. It's you had I'm sorry, that DH1 is supposed to be right here. That's the first divergent high. There's the first drop. Divergent high 2, the much bigger drop. These are just corrections with these divergent highs. There was DH1, DH2 when COVID hit. You can call COVID a random event. A lot of people will, black swan, whatever you want, but it was priced into the technicals on just about everything with big divergent highs, and it was a bear market by every metric, just very fast. Also one interrupted. So that's it. So there you can see the drops. That was a divergent high. This is just a massive building of that divergence that will most likely be the catalyst for a move down to at least. And look, guys, this is, here, let me just measure it for you. So at minimum, I'm looking at 50% drop in the semis, right? Come down to this trend line, get some price support in there. You might say, that's crazy, Randy. That means NVIDIA is going to drop in half. That would just be a correction in an ongoing super secular bull market just to come back and test the trend line. And this is no different, as I've been calling for the last couple months, with emphatically that we'd see a pullback to test the 200-day moving averages in the market, stock market. And that certainly just happened. They bought the heck out of it, and they're going to do the same thing, even in a strong bull trend. So even if you're long-term bullish, NVIDIA and AI is going to change the world, you ought to be, cognizant of these charts that are telling you we're going to get a correction. It appears to be, when I say imminent, we're looking at a weekly chart. Imminent doesn't mean 5 minutes from now to any minute, tomorrow, next week. Imminent on a time, these divergences take months, even years to play out sometimes on the weekly charts. But what I can tell you is we can look at sell signals. There's a nice clean uptrend line off the lows. The 200 days, which we just checked. Remember, we overshot because semis are more volatile. So you're going to get what I call those momentum fueled overshoots. In fact, QQQ was below the 200s when we covered and reversed. And so that's a check of the 200s. But you can see the semis behave very well to their 200s. So once the 200s are clearly taken out, you took them out there, you backtest. And when the market saw that the 200s gave way, you got that whole big bear market there. You traded below them. You could short every rally back to them. Finally, when you saw they were recovered, they became support. So that's what I'm looking for here, guys. And then, again, I do these long-winded videos because the payday is huge. So now we're gonna zero down a little bit. I kind of painted the big picture, showed you the levels to watch. This was a time to be covering when. You hit support on the uptrend line support. You can see it on the daily chart. That was my hard cover all shorts, go full long. Beautiful uptrend line, 200s undercut. So now where are we at? All right, let's talk about it. So there's pretty significant resistance, not super strong, but decent. But remember, we're coming off in the semis, as I highlighted it back when it happened. A big old fat bearish engulfing candlestick, divergent high followed by a trend line break. We can now zero down if you want to the ETF. That's what it looks like there. Slightly different. This ETF, all ETFs are going to do their best to track the main index, but there's going to be a little drift. Either way, you can draw that. You can play around. You can put the trend line like that if you wanted. You can put it like that if you wanted and break down back test. I think that's how I had it on SOXX. I'm just going to leave it here. But here's the thing. So timing is everything, right? So you might say, okay, yeah, Randy, I know the cycles are huge and the next big drop, we finally get it. So where do you enter? Well, there's the trend line. Let's go to the actual ETF here. SOXX. So there's the uptrend line. We're on it right now. This is what I do. I set a price alert. Oops, not a parallel trend line like I just did. Click set price alert. Okay, and then I'll check it. And when it breaks, that's a sell signal. If a solid red close is even better. And then that would say, maybe it was just a counter trend bounce. There's the high right there. There's the bearish rising wedge breakdown. There's your fibs. So far, we're right on the 50% now with the 61.8 a little above that and that price resistance there. So what I'm doing is I'm highlighting. I'm going to go through some, but not all the components. I know I'm probably going to lose most here at this point, but I'm going to go through because I like to do that. I always say an index or a sector is simply a sum of its parts. In other words, the S&P 500 or SPY is a weighted sum, market cap weighted sum of all the roughly 500 companies. I think it's less than actual 500 in the S&P 500, but NASDAQ 100, you have 100 companies in there. And so, and the semis, and this is it. So I have a watch list queued up here. We're going to look at, this is the top dog right here, NVIDIA. And NVIDIA is at that downtrend line off the highs now. Remember, NVIDIA hit, we had price targets which were hit on NVIDIA. That was based on the weekly time frame here. We hit my first target, which is price support and the uptrend line in the 200s. There was 1,001 reasons to go long, covered in the NVIDIA short and go long then, which we did. And so this is where they were expecting to buy it. They bought it. Now the $1 million question, is that it? Is that all we're going to get? And that's certainly possible. Like I said, we're getting close to escape velocity on NVIDIA too. So that's why I'm doing this video. So we're gonna reverse. We need to reverse soon. So one more way to put this is, although I cannot make a screaming case to short the semis right now, I'm going through the video and I'm going to show you a decent case. The RR is phenomenal if we're going to go and hit those deeper targets. Let's just jump back to the video for a second. Even my next target from where we're at right now, T2, if hit, it's going to be a 42% drop. T3, which I favor. If we go down to T2, we might just pass that, pass go, don't collect 200, go straight to jail kind of thing. Why? Because we already checked the 200s. All the folks that came in and bought the 200s are going to be burned if they go now. And they shouldn't go. Usually you come in, you check the 200s, you don't look back. That's usually the case. It's touch and go. And so if we come back down and we cut through them, that's where I think you're going to see just a massive amount of stops. It'll take you down all the way to T3. That 64% is when I laid out these targets before, way back here. But let me measure it now. That's going to be, now from where we're at now, 61% drop. Okay, let me get on to the rest of the charts here, because NVIDIA is not the only one. It's one of the biggest one. The psychological impact to the market cannot be underestimated. I think we can all agree on that. We're going to do this. I'm going to rifle through, not all of them, about the top dozen or so components of SOXX, and then on a daily time frame, and then we'll go to the weekly. So there's NVIDIA on the daily. To summarize, primary uptrend line support hit. That was a 10 on a scale 1 to 10 for covering a short and going long. It's so well defined. The 200 days were right below it. I think we even hit them in the pre-market session, the 200 exponential. Now you have this uptrend line, which we're cracking as I speak. We're starting to crack the uptrend line off the lows. So NVIDIA, there it is. Breakdown, there's a steep uptrend line, breakdown backtest. NVIDIA is an objective short right here, as is the semis. I like them all. And remember, this was my 60-minute chart. We hit T1 here, first target zone. Then once it was taken out right there, we hit my second target zone. We bounced back to the first target zone to give you a re-entry. Then we went down to hit my third target zone where we covered recently. That's the rally off T3, which was the final target on the 60-minute chart. Why wasn't there a T4 or 5? Because this is kind of more of the near-term swing trader, chart. So we milked a 30-something% drop, turned around, reversed it, and now I turn my focus back to the longer-term charts, which are the daily and weekly charts. All right, let's go through the rest of them. Taiwan Semi, daily chart. Split the crosshairs right between the 200-day exponential in red and the 200-day simple. Hammered right off my 134.88 support. These are all levels I've covered in previous videos. You can see when I put up my crosshairs on there, I created that line back on April 8th of 2024, long before we got there a couple weeks ago, right? Very good support level, hit it. Also 200-day moving averages with another support level just below, which we might have hit intraday that day. And then it's thin below there. So bottom line on Taiwan Semi, first of all, it's rallied back to resistance. Okay, and this is the second largest by market cap in there. It's the same story. We go down and break these recent lows. There's a big void right here. I can see it on the volume price histogram. There's really no support or no significant support to all the way down here. And so just to measure it out, that's going to be for the next leg down about a 40% drop. However, we don't have the sell signals, but if you want to wait till this breaks, you can do that. But then you've got about and it could happen fast, about 15%. So you take it here with a stop somewhat above. Again, you're getting at that escape velocity where you're getting close to those highs. It's almost like a black hole. You know how a black hole sucks in everything around it, including light. And so the gravity's so strong. It's kind of like that. When you get near new highs, they usually tend to just run it short, start getting scared and stop out, and they pop it. So I'm very open to that. But, I'm going to tell you now that, if we do, this is what it would look like. Any equal or marginal new high anytime soon. Here's my divergence line. It's guaranteed to be a divergent high. And so you can, the way to take it, like I said, you're probably going to pop it. So, would take it with a tight stop if you're going to do it. Or, I'm going to revisit the index charts. At this point, let's see those indexes break down. They're right now, I told you I had an alert on QQQ, but we're right on the trend line. I'm watching on another chart. We haven't broken it yet. We're still holding those trend lines on the indexes. Let me go through the rest of these quickly. Just going to show you how beautiful technical analysis does work. I know there's some, couple vocal folks on the site, and one's just so mad and angry that technical analysis, it does work. It's a beautiful thing. You had so many of these semis, so many of them come down and hit key. Here's the 200-day moving averages. Again, this one split the crosshairs. This is Broadcom. There's the 200 simple and exponential in red. And that was after a very brief, remember, kind of everything was dumping. Markets were in sell-off mode. So some bears saw the break of this trend line, might have shorted it. They got burned. You always hear me talk about BOD support levels, meaning benefit of the doubt. So here's a good example. Why was I covering that morning when some were breaking, like this one breaking a trend line? Because at the same very moment where some bears might have saw a break of the trend line, or bulls and gotten stopped out, you saw a pullback to the 200s that you haven't seen in this stock. Look at how they were buying it back here. It was a gift when you got pullbacks to the 200. And once it took it out, you want to short the rallies to it. And so it's been riding up. That was the first visit in a long time. So now the $1 million question is, what's next? Is it off to the races? Guys, very possible. And again, don't short it here and ride out a 30% rally or whatever if this one wants to go to new highs. But I can tell you right now, this is number 3 already covered. There's a breakdown. There's a clear uptrend line off the lows. There's a clear breakdown for the first time. Now we haven't closed the day. There was an intraday. This is why I talk about the benefits of trading on the time frame you're analyzing on. This is a daily chart. This one broke down yesterday intraday, but we had a stick save. So, candlestick rallied up to print back above the trend line right there. Right now we're below it. Take this collectively. The more that breaks support, the more likely the rest of the lot is going to follow. All right, ASML, another big semi. I'm going in order of market cap within SOXX. Look at that beautiful support level. Massive void there in the volume at price histogram. Hopefully you can see it. I'll turn it up for you guys in this video. There it is. These are things that go in here. And again, these aren't just random levels. You can see I added this line. This line was created back in December of 2021. I updated it, whether I tweaked it or did something to it, not since January 2024. So it wasn't a random event. This is technical analysis. This is, if I was long ASML at the point in time or short, I would have been short. I would have hard reversed and covered right there. That's again a massive support level with the big volume of price histogram void, these big highs, this massive, so blatantly obvious breakaway gap. In fact, you broke out the day before, 2 days before, held it, and when the bulls saw it stuck, a massive explosive gap above there. So on a 10, that's a scale 1 to 10, that's a 10 for support. And again, so the market's doing what it needs to do. Technicals work, especially with these semis. I will say, yeah, the indexes are a little tricky. You have flows, big funds moving the money market, that what they call the that steady bid of 401k money coming in and all that stuff. But at the end of the day, if you're not using technical analysis, what are you going to use? You want to use fundamental analysis, go join Warren Buffett and have a 10, 15-year time horizon on a position. Good luck with that. The only way to successfully navigate the markets on a especially an active trading, a swing trading basis, even a trend trading basis is technical analysis. All the better when fundamentals come in and align with that trade. But there it is, explosive rally off major support, following just super clear sell signals. Big divergent high, breakdown of trend line 1, breakdown trend line 2, and a drop of 31% to get there. Of course they're going to buy it. And what do? We bounce, put up some fibs. Let's do that. Put up fibs here. And right back to a perfect 50% Fibonacci retracement from the drop from the highs down to the lows. So $1 million question is where we go from here, and that's why I'm doing this video. I'm going to go through a few more. We're going to get to the weekly charts, and I'll wrap it up. All right, next up, AMD, Advanced Micro Devices. Put in, at least on the RSI down here, divergent low, at some support levels. Also had a brief stint where it took out this primary uptrend line off the lows, but recovered because, again, birds of a feather flock together. So if nothing else, this is a takeaway because we all see what we want to see. There were a lot of bears that probably wanted to short that breakdown. And that's after AMD put in this big divergent high, bearish engulfing candle, and island cluster top. That is a massive trio. You don't see that often. You've got 3 very high probability topping indicators there. That's your bearish island cluster top. 3 candles separated by gaps on both sides with a bearish engulfing candle in the middle, and that marked a significant high. Now, the point being, from the highs down to that low, the stock was down 45%. So what are you going to do? The dip buyers are going to come in and buy. And again, they bought AMD mostly because everything else got bought. So when the markets, when the flows, when it's a hard reversal and all of a sudden the institutions are buying, the algos are buying, high frequency trading reverses, I'm talking the morning of back there when we reverse, everything's going to go up with it. Because you're getting short sellers selling out of SOXX, the short semiconductor, and they're buying XOXL, the long version, or these individual stocks, or the ETFs that then have to turn around and buy the stocks. Okay, where am I going? All right. Looks like it's run its course, or at least there's a good chance. This stock, let me be clear on this. So here's AMD. This is a big one. Clearly, not like slightly, clearly lost the 200s right here. It hit them. They did what they do. They come in, they bought the 200s, they bought, but there was hardly any follow-up buyers. It just stalled out on the 200-day moving averages, the intersecting 200 simple and exponential. Clearly gave them up there, rallied back. What did they do? They sold it. They sold the 200. They sold it at the 200 simple, the blue line. Where are we at right now? The 200-day simple moving average. So I will say, clearly this is an objective short entry on AMD. If you short it, maybe a stop over today's high. That was an intraday pierce, especially on a daily close, because then the 200s have been recovered. Now I'm kind of making the short with the semis, because birds of a feather flock together. The ETFs, probably the best way to go for most folks. You have SOXX, you can just outright short it, or you can buy the leveraged inverse or any of the inverse ones. But I just wanted to point out that one, if you turn off everything, is a stock that also has a history of behaving very well to the 200-day moving averages. Once it regained it, as it did here, you buy the back test, 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 until it takes it out. Then you start shorting the rallies back to the 200s. In this case, it was the 200 exponential they were selling. Okay, on to the next one. Qualcomm, divergent high and island top right there. An island top is single candle separated by gaps on both sides. A very high probability reversal pattern, meaning not just a short-term trade, but a trend change. And no matter what happens, this thing can go to the moon from here, but that will certainly mark a trend change, because from there that stock fell 34%. Effectively hit the 200s, was down below them a couple days, but recovered back above there. But it's back to resistance. This is what I'm circling here, and this is why I'm doing this video. A lot of these stocks, they're back, after a bounce. with the market and the semis bouncing from where they were expected to bounce. That's where we're at. I'll get to the weekly. I had a little note to see weekly. So it's at resistance. Look, and if it pops this resistance level, it's pretty thin up until here. So there's not a lot of resistance left until we get a lot higher. But I can tell you we're at resistance now. You are above the 200s, but again, these guys, volatile stocks like this, have a history of briefly moving. You know, when they test them, they'll overshoot them, undershoot them a little bit. So we'll see where that one goes. A few more. I'll pick up the pace here. Texas Instruments. Again, beautiful tag. And you take this collectively, and this is what I do when I'm analyzing the markets or sector. Go through the top holdings, and collectively, when the majority of those stocks in a sector are hitting key support levels, be it important moving averages, horizontal price support, uptrend lines, then that's the time you want to cover and game a bounce or position for the next trend up if you think that's where things are going. Maybe this divergent high was just like this one here that gave us a a nice correction of about 12%, or maybe it was more like this one back here where it was followed by a 26% drop. So far, this one's only been a 14% drop. Or this is where I'm looking at, guys. This is where I think we're at. These are the peaks back in 2021 when the Nasdaq peaked, and from high to low, the stock fell 30%. So I think there's the chance that we're looking at something more like that one. AMAT, very important one. The chip equipment makers, as I said, the semis are the canary in the coal mine for the tech sector. Then the chip equipment makers are the canary in the coal mine for the semiconductor sector, because AMAT, KLAC, those are the ones that make the equipment that make the chips. So when the chip makers get a lot of orders, they plan to be pumping out a lot of chips, they're going to be buying the equipment from AMAT, KLAC. So what I can tell you definitively is KLAC had a beautiful uptrend. AMAT had a beautiful uptrend line. That trend line was clearly broken, and this is a back test. In fact, we've been back testing that trend line for 1, 2, 3, 4 days now. And the way this works, look, if we take it and we start moving up, then that's nothing but bullish. That was a big whipsaw, aka bear trap. As of now, if you want to take it on face value, it's a breakdown, a back test, which offers an objective short entry. And it's a breakdown of a primary trend line. So that would say that this marked a significant top, and now we already started embarking on a larger downtrend with more to come. Micron, again, guys, this is why I'm doing these videos. I could sit here and I'm not going to cover every component. Look how beautiful that uptrend line is. Boom, 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 boom. This was a no-brainer. But again, now where do we go from here? Okay, you've heard enough. Okay, yeah, a nice reversal there. Right back into big resistance. Again, 106.63. I created this line back in May of 2024. All right, so it's not just a random level. It was there because that was a very significant support level. Massive gap. They successfully back tested the gap. You had an uptrend line. You continued up. Put in a divergent high and a big, huge bearish engulfing candle. We fell from there, as we should have, and hit a perfect tag of the uptrend line. And so the buyers came in there. And maybe we are off to the races. But it's even if we are, you're probably at least going to get a pullback here. Because the point of this video, I'm showing you a lot of stocks having healthy bounces right back into resistance. You can also put a lot of near-term uptrend lines, just like the stock market below those. Big divergent high. There's your sell signal that came on the break of the uptrend line or the wedge, and you've rallied back. Here's one that clearly took out the 200s, and it's back testing from below. So that's the story on these guys. You got a lot of them, a lot of them that hit and tested the 200s, like ADI, Analog Devices. And so fast forward, whether it's 3 weeks from now or 3 months from now or a year from now, when the majority of these guys give up the 200-day moving averages, you'll know you're in a deeper bear market. Right now, it's kind of a mixed bag. A lot have broken the 200s and are back testing, and that's what makes this, in my opinion, an objective time to short the semis. And again, you can use, like I said, any SOXX, XO, XL, or no, you want to, you could short XOXL. That's sometimes a trade I do where you're capitalizing on the decay of the leveraged ETFs, SOXL being the 3-time bull. But I'm probably getting a little too ahead of myself here. SOXX is the 3-time bear, and then SOXX is just plain old ETF. I don't know if I should continue much more because this video is now getting about the 40-minute mark. It's repetitive because I'm showing you all of these guys hit big support levels. That is where we covered everything, went long, and the $1 million question. If you are bullish and you think we're going a lot higher and that's it, great. I wouldn't buy here. I'll tell you that right now. It's an overbought rally back into resistance. One of two things right now. You're either short here, and you can play the quick pullback trade, or you can go out and hope, keep your eye in for the prize, which again are those longer term. I don't even have them numerically labeled here. I'll get it out to you. Let's just say, well, we already hit this trend line. Another test of the trend line would certainly be a near-term pullback target. Another test of the 200 days would as well on SOXX. But I look longer term on this one, and I have to, like I said, all the splits, everything got messed up here with that last split, or I'm sorry, the split on there, maybe a reverse split. No, it was a regular split. All right, so I'm just trying to eyeball this for you and give you an idea. Primary trend line, once that goes, we're probably going to go down here to this level on, this is the index itself, about a 25% drop from current levels. Next stop comes in with the primary uptrend line, about a 42% drop. Okay, and this is where, especially if this was the high, well, we're going to visit this trend line sooner or later, whether we make a marginal new high or not. I'm betting no on that. That this trend line will go, and when it does, you want to wait for that. There's no problem there. You got plenty of meat. Once this near-term uptrend line goes, we'll come down to the primary trend line, and again, that could support a longer-term bullish case. I'm very open to this thing going and then having a much deeper drop, and that drop would be from high to low, a 65% drop for the semis. That's if this trend line goes. I'm getting way ahead of myself because right now we're still above this trend line and we're still above the 200-day moving averages as far as the sector goes. Let's see. All right, guys. So those are the levels. To go to the weekly charts would help support the case that I'm making that these guys look potential for a major top already being in. And again, if we go up much more, then you're probably looking at that marginal new high scenario. So you have to figure out how to if you are going to short, how to trade it. If you're long, if you're bull, how to trade it as well. I gave you levels. Remember the same levels that I give you support levels that you can a short seller might want to look to short a break of. A bull, those bullish on a stock or a sector, will look to buy pullbacks to those support levels, maybe with a stop on the other side of it, right? And if the trend line goes, then your next level's right here, right? So forth and so on. All right, I am going to wrap it here. I could sit here and talk about charts all day. It's what I love, and believe me, I've gone through all the semis. I wouldn't be doing the video if I hadn't, and on weekly time frames and everything else. Here's QQQ, just trying to poke. Look, a little 5. Look at that little intra-period poke. But like I said, this big divergence is weighing heavy on this. We're near-term overbought. We're probably going to get it. S&P 500 has already broken, and now remember the other day was QQQ or the NQ futures that broke, but then ES and SPY and QQQ, they all were holding above those trend lines. So now we have a break on SPY, but we need QQQ to follow suit. QQQ on that trend line off the lows. So we're right on the trend line now as I wrap this video up. We'll look at futures real quick. So the S&P 500 futures have clearly printed a 60-minute close. Remember, that's what I like to see, a solid 60-minute close on the 60-minute chart here. So there's your sell signal on the futures. Just need that QQQ to go to increase the odds. But it looks like I said, I told you this morning, 90% chance we're going to get it today and get a red day here. There's your breakdown right there. little, I'm going to pull this price support level to right there. If we take out 19,687-ish right there, it's these two previous reaction highs that will most likely usher in more selling. So that's, if they're going to buy it up aggressively and this is going to prove to be a false breakdown, that's where they'd probably step in. But like I said, this is, the order flows reverse. High frequency trading goes the other way. They step in front of, instead of stepping in front of the buy orders and exacerbating the up move, it works the other way on the downside. We'll wrap it up here right at the 45-minute mark. This has been Randy Finney with Right Side of the Chart. Have a great day.